My name is Dan Dorval, and I'm President and CEO of Dorval and Cherney Financial Advisors. I am an independent certified financial planner and author of my book, Financial Success for the Rest of Us, Reality-Based Financial Planning for Mainstream America.
Hi, my name is Leah Woodley. I'm an associate financial advisor with Dorval and Cherney Financial Advisors. Our conversations discuss what it means to do quality of life planning in all areas of your life. Then sometimes we encounter clients who may have a ton of assets, don't even have the ability to spend all the money that they have, don't have any heirs. In those type of situations, what would you suggest in terms of who to leave the money to or what to do with the money that they may never even touch?
It's a great question because for a lot of people, they get so relentlessly focused on saving and accumulating over their whole career. And now they're in this really weird situation to them where it's not that I need to save and accumulate. I need to figure out how do I actually distribute this money in a way that aligns with my values and priorities and motivations. And so, we'll get people still, even this week, I ran into somebody where they have more money than they're ever going to need. They ended up waiting on Social Security. They're collecting very substantial Social Security. They have more assets than they're going to need, and they are charitably inclined. Now, if you are over 70 and a half, and these ages get confusing for a lot of people, but if you are over 70 and a half, you can do what are called qualified charitable distributions directly from your IRA right to a charity. Now, the key here is it has to go directly from the IRA right to the charity. Now, you don't write that off on your taxes. So if I give 10,000 to my church, if it goes directly from my IRA to the church, the IRA is already pre-tax. The qualified charitable distribution does not count as taxable income. It's like it never happened. And so I'm effectively giving tax-free dollars without needing to do anything specific on my taxes other than report that it was a qualified charitable distribution because the 1099 might not be clear about that. So you do have to be careful in that regard. But that is an awesome tool to be able to do things like this. Now, the second one is if I am, going to ultimately pass away, and maybe I either don't want my kids to get all this money or my heirs to get all this money, and I'm charitably inclined. Now it's a question of leaving the right assets to the right people or the right entities. So, in a perfect world, we would love for people to leave, like IRAs, for example, to a charity. If you don't need that to go to heirs, that pre tax money can go to a charity 100% tax free. If I leave it to a person, when they take the money out, they're going to have to pay taxes. So it's great strategy to leave like a Roth IRA to a person. That might be your children, grandchildren, somebody you know. Leaving that to a person's income tax free. If I leave the IRA then to the charity, that can also be tax free. If you have appreciated assets, so let's say I bought, Nvidia or Microsoft or Apple, and I bought that a long time ago, and now, it's worth a lot of money and I have a lot of capital gains. I don't typically want to gift that to a person while I'm living because they maintain the same cost basis. But I could give it to a charity. And now if I give it to that charity, they can sell it 100% tax free, and I get to write off the whole amount that I gave to them, or potentially write it off depending on your situation. So if I die, that holding will get a step up in cost basis, and now my heirs might not owe taxes on it. So there's just a whole bunch of different puzzle pieces involved with how do I get these different things to my heirs or to charities in a tax efficient way.
That's great that there are many options and that you can actually not just do something willy-nilly, but do something that aligns with your personal values and motivations and goals. So that is excellent to know that there are things that our clients and our viewers can do um, that are in alignment with what they believe in.
So one of the things too that a lot of people don't necessarily realize, these people who came in had a concentrated stock position. They had both worked for the same company for a long time. They had bought shares in this company. The company appreciated over time. And so they didn't necessarily want all these assets to go to their heirs, but they also don't really want to sell the stock because they would have to pay a bunch of tax on capital gains. So one of the strategies we discussed with them is they can actually set up what's called a donor advised fund. So you'll see the acronym DAF. So a donor advised fund, there's a lot of different places you can set this type of thing up. Most of the major custodians will have some form of donor advised fund. What I can do is set up this donor advised fund. I can gift some or all of my appreciated stock to this donor advised fund. Now it gets sold. I can invest it in whatever way is appropriate based on the goals of the donor advised fund. And I now get to write that off as if I made a gift to charity immediately. But yet, now let's just use an example. Let's say I gifted $500,000 of appreciated stock. So that whole gift would be tax free because I'm putting it into a charitable donor advised fund. Now I can decide how I want that donor advised fund to kick money out to charities. I might do 5% per year or 10% per year, or maybe I do a big lump sum one year and maybe nothing the next year. So I get to pick and choose how I want to do that. I could even involve my family in that donor advised fund and say, hey, let's get together and identify charitable causes that we feel strongly about. And now you might have an opportunity to get those values down to maybe the next generations. So a donor advised fund can be a powerful tool specifically for appreciated assets. Or at death, you can leave your IRA to a donor advised fund and now create a legacy of giving for your family. So there's a lot of different opportunities here.
Definitely. Now, I will say with donor advice funds, we don't recommend that just everyone go out and set that up. So, do you want to talk about who that would be ideal for?
Yeah, it's usually when you have an unusual situation that involves a relatively large sum of money. So I have a property, I've held this property a long time. It's not my primary residence. I'm going to now sell this property. Well, I might incur a whole bunch of capital gains tax on that property, especially if I depreciated like the whole thing over the time I had it. I could technically give that donor advised fund through give that property to a donor advised fund. It's a big chunk of money all at once, but maybe I don't want to give that all to charity all at once. So it's usually an unusual situation. Maybe I sell my business and I have a really large taxable gain all in one year. I might do an unusually large contribution to a donor advised fund, write off that against that unusually high income, and this tax planning works great. If I'm just giving $5,000 a year to my church, and that's just what I do every year, you don't need a donor advised fund for that. Just donate the $5,000. But if you did get 100,000 of appreciated stock, you could put that in the donor advised fund. Now gift your 5,000 from there. So there's a variety of different considerations, but you're right. It doesn't affect most of the people we help, but it's an important tool for those where it makes a specific sense.
Well, thank you for clarifying that. Is there anything else you want to add? I think you've provided some great options out there for viewers in this circumstance where they have more money than they know what to do with. So, any other things you want to add?
Gifting is one that people really get confused about because another issue is if I have grandchildren, for example, and I have all this money, I don't know what to do with it. In many cases, I can gift up to $19,000 per person per year with no tax reporting requirement necessary. Now, it's not about paying taxes. Gift taxes you don't typically owe taxes when you make a gift unless you did an enormous amount of gifting. But what happens is I can give that money while I'm living, have them use it for important things like going to school or maybe getting married or buying a house, starting a business. You can see the impact of your gift while you're living. as compared to dying and these people get all of this money all at once. So I think being intentional about what your values and goals are with your estate, I think that's one of the most critical elements.
I think that's a great point. I think that now you have the opportunity to just sit back and think about what is important to you and how you would like to do things. I think being able to see what you're gifting is a great option. So thank you for sharing that as well. Well, this was a great conversation. We provided many options out there for those of you who may have additional assets that you don't know what to do with. I hope that you can be intentional about what you would like to do with those funds and take some of our advice to heart. Until next time, have a good one.
Thanks, Leah.
Thank you.